afternoon. You're watching Business World Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Wednesday. The index unable to hold on to gains made the past 2 days, once again bucking the rally in Asia and most part of the globe here. First, let's have a look at U.S. futures here. As you can see in this chart right here, the S&P 500 and the NASDAQ both climbing here. The S&P 500 up at least 0.4%, and the NASDAQ likewise in the green here. That's after Alphabet and Amazon had exceeded revenue projections. Amazon's Jeff Bezos also stepping down from his post, handing in the reins to Andy Jassy. Most of Asia following suit after those gains in U.S. futures here. If we try to take a look at how most of our major gauges here, at least in Asia, are performing, you see here Japanese indices here ending the day here in a positive territory. The Topix is edging higher by 1.3%. The Nikkei likewise also in the green here, up by 1%. Also, you have the likes of Kospi ending Wednesday here also in the positive territory. That's up 1%. Australia's S&P also ending the day here, making some gains that has climbed 0.9%. But Hong Kong here bucking the rally. That dipped, as you can see here, continuously in the red here, down by 0.25%. That's after it imposed more lockdowns, some of which are ambush in nature, really to test community neighborhoods as to the spread of COVID-19. But joining Hong Kong, the PSEi rather, also had a bumpy hump day here, snapping the 2-day rally down by 0.1% to 6,859.46. Local shares were poised to end even lower to 6,819, as you can see right here. But a last-minute activity pushed shares higher. Foreign investors, however, still on dumping mode here. They remain sellers for the 14th straight day. That's valued at 460.1 million pesos. But I want to zero in on some of our lenders here, after a majority of them actually reported higher non-performing loans in the last quarter of 2020 compared to the previous 3 months. If you try to take a look at this graphics, we can show the graphics right here. You'd see here a number of our lenders, most of them our biggest lenders rather, actually posting higher soured loans here for the fourth quarter of 2020. The likes of BDO, that NPL is actually at 2.5%. That's higher compared to just 1.83% back in the third quarter of 2020. Also, Metrobank posting higher non-performing loans here at 1.6% compared to just 1.28% back in the previous 3 quarters. In fact, only Security Bank, at least for those who have already reported, is a loan lender which saw NPLs actually declining in the last quarter of 2020. That was down to 3.89% from 4.02% back in the third quarter of 2020. Looking at how the sector has performed, most of them, at least this Wednesday, in the red here, Metrobank being the worst performing among our banks here. It's down close to 8%. Security Bank also chipping some 0.7%. Also BPI, as you can see, are also in the red, down 0.4%. Now, from lenders, let's move on over to our flag carrier, Philippine Airlines. They have just confirmed the furlough of more than 2,000 employees. This is part of the airline's restructuring efforts. Other reports indicate a mix of voluntary and involuntary separations across all departments this month. Although getting a bit of a boost here after making that hard move. Shares are up close to 1.1%, now priced at 6 pesos and 57 centavos a piece. And lastly, let's have a quick glance at what has been so far the most actively traded stock of 2021. I'm talking about Abra Mining. That has advanced by close to 5.5% in today's trade, despite, of course, not reporting any profits so far this year. That has so far seen a 100% jump year to date. The stock so far valued at 5.8 centavos a piece. Now, here are other headlines we're keeping our eyes on. The Bureau of Treasury has made a full award of its reissued 10-year bonds on Tuesday as rate climbed on subdued demand and faster inflation expectations. The Treasury borrowed 30 billion pesos through the reissued bonds that were auctioned off yesterday. The offering was more than twice oversubscribed, with bids reaching a little over 63 billion pesos. The notes fetched an average rate of 3%, 34 basis points higher than the 2.74% quoted when the debt papers were offered last August. A bond trader told Business World that the bids in yesterday's offering were not that strong, which caused average rate to rise. National Treasurer Rosalia de Leon says they expect some upward adjustment in the long end at relatively low pickup in yields. Now, the Bureau of Customs has exceeded its collection target for January by nearly 7%. However, preliminary data showed the 47 billion peso collection for the month is 15% lower year on year. Customs say 11 out of 17 revenue districts beat their respective collection targets for the month. Targets, however, had to be reduced several times last year to reflect the expected slump in taxes as the economy plunged. The Bureau's full-year collection goals this year has likewise been reduced to 620 billion pesos. Zuellig Pharma has bought 10 additional ultra-low temperature freezers as it gears up for the vaccination rollout in the Philippines. This is on top of the 14 ultra-low freezers that it has already deployed. The healthcare provider said the purchase would allow them to store doses coming from different vaccine makers and shots with varying temperature needs. All in all, the 24 ultra-cold freezers can hold 7 million doses at temperatures as low as -70 to -80 degrees Celsius. Zuellig has cold rooms with temperatures of 2 to 8 degrees Celsius in facilities located in Laguna, Parañaque, Cebu, and Davao, and has the capacity of up to 629 million doses. Its walk-in freezers that have a temperature of -15 to -25 degrees can store up to 52 million shots. The government plans to purchase up to 148 million doses this year to inoculate 70 million Filipinos. The country's debt to GDP ratio hits new highs or lows for that matter. Outstanding debt reached 9.8 trillion pesos, jacking up debt share to GDP to 54.5%. To talk about that, among other developments, we have on the show UANP Economics Professor Ronilo Balbieran. Good afternoon, Prof.
Good afternoon.
That you could join us again on the show.
Yes, good afternoon.
All right, so despite the debt stock rising here, you have the finance department tapering concerns saying, this is not alarming. Do you subscribe to that, or should we be expecting a reduction of the ratio?
Well, given the pandemic, we really need to jack up that debt to GDP ratio. So, and in relation to whether it's alarming or not, I think we're very far from alarming rate. So remember that I think in 2004, when we had the highest, when we declared fiscal crisis, the debt to GDP ratio was at 78%, if I'm not mistaken. So that particular 56% is way below the alarming level when we declared the fiscal crisis. So I think this is understandable, and this is actually needed in terms of actually stimulating our economy. So let's borrow and let's make the government spend first, so that it will resuscitate the economy, and let's wait for the private sector to recover by next year and the years to come.
But given that, Prof. Balbieran, do we have enough in our fund pool to actually finance this level of debt?
Yes, I think there are two main considerations in judging whether we are in safe debt to GDP ratio. So first is the actual percentage to GDP, because debt, you measure your debt in terms of your annual income capacity. But at the same time, you ask yourself, is the loan demandable already? Is it due? So majority of our debts are actually more than 15 years in terms of loan maturities. So in short, they're not due tomorrow. They're not due next year. So therefore, we have enough leeway we know that well, our businesses are not able to pay their taxes properly this year, last year, and we can wait for them to pay their taxes next year, and we will be able to borrow more and pay sufficiently by next year and the years to come. So
All right.
it's very comfortable, and in
Now,
fact, I think there other countries are still striving for higher debt to GDP ratio just to make sure that they recover their economic activities.
okay, moving on from there, Prof. One other development that we witnessed, at least in the past 24 hours, you have the bicameral conference already approving Create here. Well, do you see this finally, or at least immediately, washing away any cloud of uncertainty over the investment climate in the country, or much remains to be seen here?
Well, we're very happy because this is actually the final stage before the president signs a particular law. So I think this is a good advance signal for the foreign investors out there that, hey, we have fixed our act together and we're ready to receive you. And please come here in the Philippines and let's rescue the Philippine economy together and maximize what the Philippine economy has to offer, which is our huge, large domestic market. And actually, in addition, this is actually two birds with one stone. So we are attracting more foreign investors, but at the same time, this is actually recovering the activities, the slump in the economic activities of our domestic enterprises, domestic businesses. So this is actually a treat for our corporations and companies. Imagine the small companies will have a reduction of immediately 10% from their income tax. So the small ones, and then the bigger ones will have a treat of a reduction of, I think, 5%. So this is really a pump priming legislation from the point of view of actually having less corporate income taxes, at the same time attracting more investors. Actually, not just from abroad, and also attracting investors from our country as well.
Okay, and then at the same time, you have one other economic measure that has, at least so far, cleared a House panel here. I'm talking about the economic chacha. But you have lawmakers also dropping a provision on land ownership here. How crucial is this, and do you really see this improving investment sentiment in the country?
Yes, I think even some of the original authors of our constitution subscribe to the idea that we shouldn't have put the economic provisions there to begin with. So it's very difficult that you put restrictions that can actually can be changed by the economic circumstances, yearly, quarterly, monthly change in circumstances. So we shouldn't be putting particulars or details of economic provisions in our constitution. Our constitution must only contain our hopes and dreams, our general principles that are we open to foreign investments or not? Are we to protect our own jobs and our own industries or not? So at what participation foreign investors can have on public utilities, on mass media, on land ownership, I think that should be better be prepared and stipulated in the form of a law, so that when situations change, we can have more restrictions or less restrictions, but we don't have to go through the constitutional change every time that we have a change in the economic landscape.
All right. Now, lastly, I want to ask you about this. Of course, one other thing that's proving to be a hurdle, not just for consumers, but even for other stakeholders here. You have the Department of Agriculture at least imposing a number of new measures here. For one, you have a price cap on meat products. At the same time, they're considering lowering import tariff here. Uh, that's really to arrest rising prices of goods and scarce supply. How should the DA do its balancing act?
Well, it's very difficult. No? I pray for them. I hope that they figure it out. But I think from an economic standpoint, government can do their price controls, but price controls usually are the most inefficient way. But it's the shortest possible, the time-bound concrete activity that they can do, but over the medium term and long term, we should actually be applying modern technologies. No? So we put all the suppliers in one portal, so everybody can see the prices of meat, vegetables from the supply side all the way to midway, transportation and logistics, all the way to our wet market. So that way, everybody can actually strategize on the basis of real-time information. And I think both DA and DTI are working very hard in terms of digitalizing this whole process. Now, it's very tiring for our government officials to be guarding all wet markets. You cannot possibly do that for all markets in the country. So the way to do that is to take advantage of the power of technology, of cell phones and of internet, and load all our data there so that everybody can see, and then therefore everybody can guard one another and can actually work together in terms of increasing supply. There's no other way of beating prices, increasing prices, but by actually increasing the supply of meat, vegetable, and that everybody can see the movement of.
All right, it's all about coming up with long-term programs and solutions. Thank you very much for your time this afternoon, Professor Ronilo Balbieran of the University in Asia and the Pacific.
Thank you very much.
And those are the biggest news this trading day, February 3, 2021. Catch Business World Live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News.